Hey, what's up guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 15 free stocks, Moo is going to give you up to 15 free stocks when you open a new Moo brokerage account. They're going to give you up to 15 free stocks for just trying out their brokerage app. When you put $100 in your new Moo brokerage account, they're going to give you 5 free stocks. When you put $1,000 in your new Moo brokerage account, they're going to give you 15 free stocks. Guys, this is a limited time offer. So don't delay. Act today. There's a link down in the description box of this video. Go click on that Moo link. Open up your new Moo account today. Go get that free stock. Go get that free money. I'm going to be using the Moo brokerage app, guys, for all of 2024 and beyond to buy 3 big boy blue chip paper assets that I believe will give me the opportunity to double my net worth over the next 10 years. So if you want to be a part of that journey, and you want to rock with me, and you want to copy my plan, go down to the description box and click on that Moo link and get yourself up to 15 free stocks when you sign up. What are you waiting on? Be decisive. Do not be indecisive. If you want to build wealth, you got to have a level of decisiveness about you, right? That basically says take action. Also, what I'm going to do for you is I'm going to send you my wealth transfer blueprint. That's a video I did outlining those 3 big boy blue chip paper assets I'm going to be buying to double my net worth over the next 10 years. I will send you that video so you can take a look at it. Now, you don't have to follow my plan. You can create your own plan. I'm not your financial advisor. I'm not trying to tell you what to do. I'm just telling you what I'm doing. And I believe what I'm doing gives me a really, really good chance to double my net worth over the next 10 years. And if you want to look at my plan and even copy my plan, send me an email and say, hey, Richard, I opened my Moo brokerage account. I've funded the brokerage account. Send me your wealth transfer blueprint. Also, for you guys that are brand new at this investing thing and you open the Moo brokerage app and you're not sure how to use it, I did a tutorial video for you. All you got to do, again, is send me an email address down in the description box. Send me an email. I will send you the wealth transfer blueprint video and the Moo tutorial video. So that way, no excuses. You got exactly what 3 big boy blue chip assets I'm buying, and you have a tutorial to show you how to use the Moo app. So if you want that, guys, it all starts with what? Opening up that Moo account. So go down to the description box, click on that Moo link, open your account, put you some money in it. You're ready to build wealth. And then let me know, and I'm going to send you those 2 videos to get you well on your way to building wealth. Well, guys, I appreciate you checking in, tapping in, stopping by, whatever you want to call it. I appreciate it. On this channel, we do what? We give you information that you can use to build your wealth. That's it. That's all we do on this channel. We give information so that you can build your wealth. Well, why should I trust you? You don't have to, but I got 25 years of experience. Yeah, I got 25 years of experience doing exactly what I'm getting ready to tell you. Self-directed, investing on my own, buying real estate for income, buying paper assets to build wealth and generate income, building businesses, building side hustles. All of that I've done, guys, over the last 20 years or 25 years and have been very successful at it. So, hey, I'm not perfect. I don't know it all. I'm not licensed anything. I'm just a guy that got out there and did it on his own. And I'm trying to give you that information. We got a lot to cover today though. Golly, guys, the crypto market is, I'm telling you, something major is getting ready to happen in the crypto market. And I don't think it's good. That's the reason I titled the video the way I titled it. It's a massive crash coming, in my opinion, based on this information that I've uncovered. And I'm going to share that information with you guys. And again, man, it's not in an effort to change your mind. It's to give you information, because a lot of y'all that are investing in crypto don't know this. See, a lot of y'all just FOMOing, fear of missing out investing. Y'all just FOMOing because somebody told you it's a good idea, no homework, no research, just dive on in and not really knowing what's really going on. You're FOMOing. See, FOMOing is going to lead you into financial disaster. So I'm here to give you this information. You can receive it how you want to receive it. Some of y'all will say, hey, this dude's stupid. He don't know what he's talking about. Forget him. I'm going to the moon with crypto. Hey, man, do that. Some of y'all might say, well, you know something, Richard? I didn't know that. Now I need to rethink what I'm doing here. I didn't know that. Yeah, the U.S. Senate called it a pump and dump. I'm going to give you the details. Just hang in there. I'm going to give you the details. We're also going to go ahead, and that's your daily dose of crypto. Y'all know I got to give you your daily dose of crypto. Monday through Friday, I got to give you your daily dose of crypto. So we're going to tackle that one last, though. But before we tackle crypto, we got to talk about stocks, because y'all know that's near and dear to my heart. I'm a traditional investor in big boy blue chip assets, big boy blue chip paper assets with a 100-year record of multiplying money, not 14 years of pump and dump like crypto, not 14 years of pump and dump, but 100 years of proven multiplying of money. So we're going to talk about stocks, specifically the Magnificent Seven. Y'all know how I feel about the Magnificent Seven. And let me tell you something, guys. If you are not considering the Magnificent Seven, I don't know what you're doing. I don't know what you're doing if you're not considering the Magnificent Seven. And I'm gonna tell you, man, they are on a trajectory that past the moon. What's out there past the moon, guys? So some of you astronomy folks, some of you people who look up into the stars with a microscope, what's past the moon? Whatever's past the moon, that's where they're going. I don't know what's past the moon. All I know is the moon. Whatever's past the moon, when you look up there in the stars and you see the moon, anything that's past the moon, that's where they're going. We're going to cover that, though. And then, of course, the first topic we're going to start the chat with is the Federal Reserve. Y'all know they're wrapping up their two-day meeting. They're wrapping up their two-day meeting, right? And there's a lot of stuff going on about what the Fed gonna do, what they gonna say today, what the Federal Reserve Chairman gonna say at his 2:30 p.m. Eastern Time State of the Union. That's what I like to call it, State of the Union, because everybody gonna be tuned in who wanna build wealth and get to the pot of gold at the end of the rainbow. You'll be tuned in at 2:30. If you want the pot of gold at the end of the rainbow, you'll be tuned in. Your boy gonna be tuned in at 2:30 to hear what Fed Chair Jay Powell says, because guess what everybody's waiting on? They're waiting on that direction, that clarity. They're waiting on the Fed to say, when are they gonna reduce short-term interest rates? Give me a timeline. That's what everybody's waiting on, right? That's what they're waiting on today, in a nutshell. But let me read you something real quick that I thought was interesting, that I think we need to think about. And here's the title of it. Here's everything to expect from the Federal Reserve's policy meeting Wednesday. So basically a recap. They're gonna wrap it up for you. Let's read a little bit of this just to get sort of what the market believes is going on. That'll help us better understand, guys, and become better investors. So check this out. The Federal Reserve has a lot to do at its meeting this week. That was Tuesday and Wednesday. But ultimately, may not end up doing a whole lot in terms of changing the outlook for monetary policy. All that monetary policy is a fancy word for interest rates, for you and I, right? It's just a fancy word for interest rates, right? In addition to releasing its rate decision after the meeting wraps up Wednesday, the central bank, Federal Reserve, they also call them the central bank, guys, right? They call them the central bank, Federal Reserve, central bank, right? Just to kind of give you guys some of the terminology. The central bank will update its economic projections as well as its unofficial forecasts for the direction of interest rates over the next several years. Just a fancy way of saying they're going to kind of give some forward thinking, some direction on what interest rates may or may not do. And all that's predicated on what? Inflation, right? That's all that is. As expectations have swung sharply this year for where the Fed is headed, this week's two-day session of the Federal Open Market Committee will draw careful scrutiny for any clues about the direction of interest rates. See, that's all people are waiting on, man. And why are people waiting on that? Because they know if interest rates go down, assets go up. It's the whole key, guys. If you don't get nothing else from this, remember that. If you don't know anything else about the Federal Reserve, know this. They control interest rates or short-term interest rates, which in my opinion affect all interest rates. The Federal Reserve or the central bank control interest rates, which in turn directly or indirectly affect all interest rates. When interest rates are low, assets go high, right? Interest rates decrease, assets increase. Why is that, Richard? Because anytime people and businesses can borrow money cheap, guys, what do they do with that cheap money? Somebody in the chat tells me, what do people and businesses do when they can borrow really cheap money? What do they go do with it, guys? What are one of the main things? If you're smart, what would you do with that cheap money? Somebody in the chat help me out. Who in the chat can give me some indication of what people will do with money when it's cheap? They buy assets. Exactly. There you go, chat. They buy assets. What happens to assets when there's more demand than supply? What will happen to the price of assets when there are more demand than supply? What happens to assets, chat? Somebody in the chat tell me. What will happen to assets when there's more demand than there is supply? This is why, guys, it's very important for us to understand what's happening with interest rates. See, when there's more demand for assets than there is supply, asset prices go up. They go up. That old supply versus demand, guys. So interest rates are extremely important. People want to know, when are interest rates coming down so that I can go shopping to buy more assets? That's what the market is waiting on. Whether it be institutional investors, whether it be retail investors, we're all waiting on to know, when will interest rates come down so we can go shopping, right? A guy like me is waiting on that because why? As soon as interest rates go down, I'm going to go shopping for more real estate. Now I can borrow money dirt cheap and then get me a better return than I pay for the debt. See, my cash on cash return is going to be better than the interest rate I pay on the debt. But I can't do that unless the rates are cheaper, unless rates come down. So that's why everybody is waiting on that. Yet, the general feeling is that policymakers will stick to their messaging, which has emphasized a patient, data-driven approach with no hurry to cut rates until there's visibility on inflation. All fancy words for we're going to keep rates higher for longer until we see inflation coming down at a pace we feel it needs to come down. And what's that? What's the target rate, guys, for inflation? Somebody in the chat tell me, what is the target rate? What is the Fed trying to get inflation down to? Where they're happy, where they believe our economy has the best chance to succeed, and where price stability sets in. 2%. That's where the Fed wants it. Where are we at today? 3.1% headline, 3.8% core. So we ain't there yet, guys. So the Fed don't want to prematurely reduce these rates, and then inflation goes back up, and then all of a sudden they got to go jack rates again. They don't want to do that. But guess what? People are getting impatient. People are getting impatient. They are starting to get impatient. They'll make it clear that they're obviously not ready to cut rates. That's what they're saying. The Fed chair is going to say today at 2:30. They need a few more data points to feel confident that inflation is heading back to target. Remember, we talked about target. Target is 2%. Whenever now you hear them say the Fed is waiting for inflation to get back to target, that's 2%. They want inflation at 2%. Right now we're at 3% on headline. We're at 3.8% on core. So keep that in mind. I expect them to reaffirm 3 rate cuts this year. So that would suggest the rate cut would be in June. So that's what people are thinking, right? People are thinking, okay, Fed gonna cut rates 3 times this year. Now you gotta understand, guys, there are some rumblings out there that are saying that the Fed won't reduce 3 times. They'll reduce twice. So we gotta get some clarity today. That's important for the market. That's important for us, right? If it's 3 times, 3 is better than 2. Wouldn't you agree? 3 times is better than 2 times. The market wants 3. If the Fed come out and don't strongly support 3, I don't know. We'll see what the market does. Right here. Markets have had to adjust to the Fed's approach on the fly, scaling back both the timing and frequency of expected cuts this year. Earlier this year, traders in the Fed funds futures market were anticipating the rate cutting campaign to kick off in March. Why didn't it kick off in March, guys? What stopped the rate cutting campaign from kicking off in March? January and February CPI inflation report is one. January and February's job reports, 2. Those 2 things stopped the Fed from reducing rates in March. It did. Those 2 things right there stopped the Fed from reducing rates in March. So now they've kicked the can down the road and they're saying, maybe June. That's sort of what's happening right now, guys. That's what's happening. That is what's happening. Earlier this year, traders in the Fed futures fund market was anticipating the rate cut campaign kicking off in March and continued to the FOMC had cut the equivalent of 6 or 7 times in increments of 1/4 percentage points. Didn't happen. Didn't happen. Now the market has pushed out the timing until at least June. Well, they have to, because the Fed ain't finna reduce right now. So what do? You kick the can down the road. You say, hey, now it's June, but it's still optimism. That's why you see the stock market still doing well, because as long as investors believe at some point this year, we're going to get them 3 rate cuts, you'll see the stock market continue to do okay. It ain't going past the moon, but it's doing okay. We're on the rocket ship. We're buckled in. They're getting ready to start the engines, right? Right now they're pumping fuel in there, right? They're pumping fuel in them big old gigantic fuel canisters, right? They're getting this, they're prepping the rocket ship. They're prepping it, but it's coming, right? The launch is coming sometime this year, and that's what investors are hanging their hat on, right? So now the market has pushed out the timing until at least June, with only 3 cuts anticipated from the current target range of 5.5 for the Fed's benchmark overnight borrowing rate. The swing in expectations will make it how the central bank delivers this message this week. All the more important, here's a quick look at what to expect. So that's what's going on right now, guys, with the Fed. I ain't gonna go no more on it. It's just, we know what the Fed is gonna come out and say today. They're gonna come out today and say, hey, we looked at everything. We need more data. We still envision possible rate cuts this year, as long as the data we get over the next several months support it, they're going to say the same old thing. Nothing major going to happen with the stock market today. There won't be any major news. I still think it's important that you watch at 2:30 p.m. Eastern time so that you become a better investor, so you start to get more in tune to what's happening. And here's a little pro tip, guys. If you do watch it, get you a pen and piece of paper. Get you something to write with. So when that Federal Reserve chairman starts saying stuff that you don't understand, just write the word down. And then what you do is you go to the $1 trillion research lab and research it. That way you start familiarizing yourself with some of this terminology, man. Guys, if we don't take the bull by the horns and get on that bull and ride it, we'll never learn how to ride it. If we don't take the bull by the horns and learn this terminology and learn how to become better investors, we'll never become better investors. That's my point here. Now, of course, you know I'm going to be back on here tomorrow morning at 10:30 a.m. giving y'all my little meat and potatoes, my little 2 cents. But I ain't no expert. I'm just a guy on here that take in information and then give it back out with my little explanation. I try to get it as simple as I can get it so that you guys can catch on to it. But you need to become better at that, right? You got to become better at researching and figuring out what's going on so that you can give yourself the opportunity to build wealth, right? Y'all know I'm gonna give y'all my little 2 cents, but I ain't no Harvard educated, Yale educated or got all these little numbers and letters behind my name. I ain't got none of that stuff. But guess what? I built wealth anyways. Yo, you don't need all that. You don't need any of that. I was watching some guy yesterday on YouTube. I wasn't really watching him, but I was just kind of going through the feed just to see kind of what was going on. And he was on there talking about, he financial space too, financial space guy. He on there talking about, well, you shouldn't be listening to anybody on YouTube who no license this and ain't licensed that and ain't licensed this. And I'm thinking to myself, this dude crazy. Come on, man. Didn't the main joke was gonna try to rip you off? And I ain't knocking at guys who got their CFPs or their license. I'm just telling you guys, you don't need all that. This guy was saying, well, you should be, you listen to somebody on YouTube, you should just take that information, go back and research it all, and then make a better informed decision. I'm thinking, guys, most of these people on here, you're just like I was. We don't understand any of that. We're just trying to find somebody that we can connect with that we feel is genuine, that can kind of help guide us along the way. Yes, ultimately it's your decision, but my goal here is not to try to get you guys to go out and hire a bunch of people to do something you can do for yourself if you just simplify it. Just simplify it. Why try to get 15 or 20 or 30 different investments? Just simplify it. Me, I'm a simple guy. I've been doing this for 25 years. I got 3 investments. That's it. 3 big boy blue chip investments. That's it. I don't need 15 investments. I don't need 20 investments in paper assets. For what? Just simplify it. You don't have to be an expert. You don't need to go hire an expert. Now, if you want to, go ahead, but you don't have to. So I hear these people sometimes, oh, you're only person you got to depend on is you got to depend on yourself and you got to depend on God. I'm like, yeah, I agree with depending on God and I agree with depending on yourself, but that don't mean you can't listen to folks and take something from those folks and go that direction because you believe what the direction that they're telling you to go is not the wrong direction. Yes, ultimately it's your decision. But you don't have to be listening to somebody that has a CFP or some licensed investment advisor. Those are the only people you should listen to. That's hogwash. It's hogwash. Now, if you want to go get you one, go get you one. But you don't have to do that. You don't. You can simplify investing and build wealth just like that. Very simple. All right, let's move on to stocks. Since we've talked about a little bit about what's going on with the Fed, let's talk a little bit about stocks, and I want to talk about the Magnificent Seven. So if you guys don't know, I've been rocking with the Magnificent Seven probably for the last 6 months, since probably October of last year, where I decided, I'm going to go ahead and make a play on the Magnificent Seven. And every week, I'm going to be putting money into my Magnificent Seven stock portfolio. 7 big boy, blue chip tech companies. And that's what I've been doing. And I've been talking about it ever since. But I want you guys to hear this, because this may get a couple of you folks out there who have been on the fence about the Magnificent Seven. It may give you some more information so you can go ahead and get off that fence, right? Here's the headline. Magnificent Seven adds $250 billion on Gemini's reported iPhone deal. They're talking about two of the Magnificent Seven companies, but hear me out here. An Epic reported artificial intelligence partnership out of Silicon Valley set stocks off to a hot start on Monday ahead of a critical week of markets. Shares of Google parent Alphabet shot up about 6% after Bloomberg reported the search engine giant and Apple are discussing a deal to bring Google's Gemini generative artificial intelligence services to Apple's iPhone, a potentially massive win for Alphabet, as some believe it's lagged behind its rival Microsoft, another Magnificent Seven company, thus far in the generative AI space. The Alphabet rally, and that's Google, guys. For you guys don't know who Alphabet is, that's Google, right? The search engine Google, basically. Alphabet rally, which added some $120 billion to the company's market capitalization by midday, boosted major stock indexes to notable gains as the benchmark S&P and tech-heavy NASDAQ rose 1% and 1.3% respectively. So that announcement, guys, now, again, it's not etched in stone yet. The deal is not done yet. But Apple and Google are forming a partnership, may form a partnership, and Apple will get some of Google's AI and artificial intelligence into their iPhone. Game changer. Already, just on anticipation, Alphabet has increased its cap by $120 billion, just off speculation, right? And of course, the S&P and the NASDAQ benefited from it. Much of Monday's gains were concentrated among big tech companies, with shares of Apple inching up 2%. Shares of AI semiconductor chip designer NVIDIA jumped by 1% as investors awaited NVIDIA CEO keynote speech at the AI Leaders Afternoon Conference, and electric vehicle maker Tesla stock rose 6% after the company hiked prices on some of its cars. See what's happening here, guys? The Magnificent Seven. Do you see what's happening? Do you see what's happening? The Magnificent Seven is getting ready to go to the moon, guys. Matter of fact, it's going beyond the moon. It's going past the moon. Look what Tesla just did. See what I'm saying? Let me read that again. Tesla's stock rose 6%. And I've been telling you guys, Tesla. This guy Elon Musk is not a dummy, guys, right? Tesla stock rose 6% after the company hiked prices on some of its cars. Increasing prices, right? Each of the so-called Magnificent Seven stocks increased Monday with the, $253 billion in combined market value. That's the Magnificent Seven. 7 companies, guys, increased market value by $253 billion. Guys, I'm telling you, what's going on? The Monday rally comes ahead of the Federal Reserve's Tuesday-Wednesday meeting, which will reveal the central bank's latest thoughts on cutting interest rates. We've already talked about that. They're not cutting interest rates today. What they're going to give us is some forward thinking on when they can cut, right? And just try to go ahead and make sure people understand they are going to cut. That's what's going to be coming, right? So there you go, man. This is such great news for the Magnificent Seven. Check this one out. Perhaps the most comparable agreement is actually Apple's $18 billion annual windfall from Alphabet for Google to be their default search engine. So Apple already gets $18 billion a year from Alphabet. So that when you when you go to your search engine on your Apple phone, Google is the default. It's big money out there, guys. Big, gigantic money. 18 billion a year just to be the default search engine on your iPhone. I'm telling you guys, the Magnificent Seven, if you're not putting that on the short list, I don't know what you're doing, guys. If you really want to build wealth and you really want to pick individual stocks, I don't know how you just don't start with this Magnificent Seven, all you need, in my opinion. Now, that's just my opinion. Y'all do what you got to do. But Magnificent Seven, I don't know how you beat that, right? Both Alphabet and Apple have taken their lumps over the last 2 years from a lack of market excitement for their AI offerings, with Alphabet stock suffering 5% sell-off just 3 weeks ago over Gemini angst, and Apple widely underperforming over the broader market over the last 6 years. So you got Apple, you got Alphabet, they're behemoths. I mean, they're behemoths. They are huge companies, guys. So they're just trying to reinvent themselves a little bit, to give themselves a little push. You got up and coming companies in that AI game that are killing it. Companies like NVIDIA, right? And there are some others. So Apple and Alphabet, AKA Google, they got to come up with something because it's very competitive right now. That's why I believe they are stepping up and trying to form this partnership, which I believe is the right thing to do. See, when you're a behemoth, it's hard to grow as fast as an up-and-coming company it's hard to grow as fast when you're already a behemoth, like Apple is, and like Alphabet is. They're behemoths, guys. So they're trying to figure out a way to reinvent themselves to get relevant again and to get some growth. That's why I think, if you're looking at 3 stocks in the Magnificent Seven that I believe represent some opportunity to really grow your net worth, I think you're talking about Apple, Alphabet, and Tesla. Of the Magnificent Seven, those 3 are low-hanging fruit, in my opinion. If you're saying, listen, I just can't afford NVIDIA at $900 a share. I can't afford Microsoft at $400 or $500 a share, whatever it is. I can't afford Meta at $400 or $500 a share. Right? Then guess what? You got Tesla, you got Apple, you got Alphabet, and you got Amazon all trading under $200 a share, guys. You know what I'm saying? So it's affordable if you just say, I just can't pull off NVIDIA at $900 a share. That's okay. For those of you that can, buy NVIDIA. Those of you that just can't pull it off, buy some of the other Magnificent Seven. Your boy, I'm buying all 7, right? I'm just allocating all 7 and just holding them for 10 years. Because I think in 10 years, the Magnificent Seven is worth more in 10 years than it is today, especially with these partnerships that may be getting ready to pop. So that's the situation, guys, that we're looking at right now. That's the situation we're looking at. And I just think we have to be on the forefront of this. We got to be thinking long term, right? We got to be thinking, okay, these guys just added 250 billion to the market cap in a matter of days. Just days. Just thinking what they're going to do in 10 years. In days, they added 250 billion to their collective market cap for the Magnificent Seven. 250 billion in a few days. What do you think 10 years is going to look like? But you got to have some patience. You got to have some patience. You got to be patient if you want to see what they look like in 10 years. See, I got that kind of patience. I'm just going to keep buying them. You add 250 billion market cap in a few days. I'm just thinking, what's going to happen when this AI thing really takes off? What's going to happen when the video goes to $3,000 a share? What's going to happen when Microsoft goes to $1,000 a share? What's going to happen when Tesla goes to $800,000, $1,500 a share? but I'm gonna be on the rocket ship. I'm gonna be on the rocket ship. I got my seat, I'm buckled in. They fueling the rocket ship right now. They're prepping the rocket ship, guys. They're prepping the rocket ship. Problem is, they don't tell you when it's gonna take off. They don't tell you. You just gotta be on it. Gotta be in the market every day. See, no one tells you when the stock market gonna take off. You just gotta be in there every day. You gotta be in there 365 days a year, ready. Dollar cost averaging every single month. Dollar cost averaging every single week. Dollar cost averaging every single day. So I do it every month, and I do it every month, and I do it every day. At least $200 a day, dollar cost average into something. That's my philosophy. You don't have to adapt that, but you better adapt something. Or you're gonna be left here on Earth with your little camera, taking pictures of the rocket ship, but you ain't gonna be on the rocket ship. You're gonna be down here looking at the rocket ship, waving at it. Oh, there's the rocket ship. I could have been on that rocket ship, but nope. I decided to just stay down here and spend my money to make the 1% wealthy. So I'm on here on Earth. I ain't on the rocket ship. I'm just waving at it, taking pictures, put it on Facebook. Oh, look at here, guys. There's the rocket ship, but I'm down here on Earth. No, don't be doing that. Get yourself in a seat on the rocket ship. I'd rather be on the rocket ship than to be taking pictures of the rocket ship. What do you want to do? I mean, for me, it's be on the rocket ship, not just sitting down here on Earth taking pictures of it and putting it on Facebook. Come on, man. Listen, if you want to build wealth, ain't no better time than right now to build wealth, guys. There's no better time. The stock market is finna go to the moon as soon as rates come down. Real estate is going to the moon as soon as interest rates come down. Y'all think real estate prices where they at right now? You wait till rates come down and that demand pick up. See, it takes years, man, to get supply. Yep, we got a lot more supply coming on, but it takes years, man. You need something like 1 million single family homes just to catch up. See, normally you want what? I think it's like 6 months worth of inventory. That's normally what you want, like about 6 months worth of inventory. We don't have that. You need like 1 million units, a million single family homes, guys, to catch up. That's not gonna happen overnight. The Fed start reducing these rates in June. Like I said, in 2 years, by 2026, my belief is your 30-year fixed rate mortgage rate is going to be in that 4.5% range. 2 years. I think that's what's going to happen. Because I think in the next 2 years, the Federal Reserve is going to do what? They're going to decrease short-term interest rates by 2%. So if you're at a 5.5 Fed funds rate today, by 2026, you want to be at a 3.5 Fed funds rate, maybe even 3.25. Maybe even 3.25. And I think 30-year fixed rate mortgage rates come down by 2%. So if Fed funds come down by 2%, mortgage rates come down by 2%. That's the way I look at it. So if I'm hovering at a 7.5 interest rate now, in 2 years, I think it's going to be in that 4.5 to 5% range. More like the 4.5% range. Why does the Fed have to reduce interest rates? Let's talk about that really quick, and then we're going to give you your daily dose of crypto, and I'm going to tell you why the Senate called crypto a pump and dump. We're going to end the conversation with that, but let's talk a little bit why the Fed has no choice but to reduce interest rates. Remember yesterday or the day before in a live stream that I did, I talked about the commercial real estate market. And I talked about who really is going to be impacted if the commercial real estate market fails. And that's going to be mid-sized banks and small banks and you. And see, the Fed can't afford for that to happen. See, here's the dilemma that these banks are in. Now, I'm not talking about your big boy, too big to fail banks. I'm talking about these regional sized banks and these small banks. Here's the dilemma they're in. The only way they make money really is they take your deposits and they lend them out. Or they take your deposits and they put them in other investments like U.S. Treasury bonds, right? So here's what's happening. When these mid-sized banks and these small banks, let's say 4 years ago, 3 years ago, they started lending money at reduced interest rates. Maybe let's say you could go get a commercial loan locked in for 5 years at a 4.5% rate, but it's only locked in for 5 years. Let's say you could go get a 2 year, no, let's say you get a 5 year treasury bond, I don't know, 4 years ago at 2%. Let's say you get a 5-year treasury bond at 2%. So here's what these banks do, since they don't really have a lot of ways to make money. I'm talking about the small banks and the medium-sized banks, not the big boy banks, the small banks and the medium banks. This is how they make money. They take your deposits. Part of your deposits, they will lend to somebody like me, a real estate investor. I come in and say, hey, I need $20 million to buy this retail center. They say, well, okay, let's look at it. Okay, boom, we'll give you the $20 million. You give us a 4.5% interest rate every single month and pay the principal back. Okay, I'll do that. Then they'll take your deposits and they'll go somewhere like a U.S. Treasury bond and say, well, okay, since these deposits are just sitting here and we're not paying our depositors any interest, because at that time they weren't giving you no 5% interest rate. Remember, they were only giving you like 0.50 because the rates were down. So they weren't giving you no higher interest rate 4 years ago. Now they are, but 4 years ago they wasn't. So they said, listen, we got these deposits for basically nothing, dirt cheap. We're going to take them and put them in a 5-year treasury bond, and we're going to get 2% on them. We're going to pay them 0.25. We're going to get 2%. We got a nice spread. It's free money. Let's rock and roll. That's what they started doing. These mid-sized banks and these small banks, lending money, putting them in treasury bonds, lending money, putting them in treasury bonds. Here's the problem. Interest rates went up. So that loan that they took out 4 years ago at 4.5%, it's coming due to maturity. But interest rates now are 7.5%. Can't get it at 4.5% no more. I got to get it at 7.5%. So as the borrower, I'm saying to myself, hell, I took it out at 4.5 5 years ago or 4 years ago. Now they can only give me a 7.5. I don't know if my cash flow on the property can support a 3% increase in interest payments. And that's what's happening. Because also what I neglected to tell you was I lost some of my tenants. So my cash flow ain't what it was 4 years ago. I've lost some tenants. It's less. Now you want to jump me up 3% on my interest rate to 7.5. I can't do that. So now they're starting to have problems with borrowers, loans coming due, who can't afford the increase in interest rate. Here's another problem they're having. This U.S. Treasury bond over here that they took out 4 years ago at 2%. Let's say they had $100 million. Let's say they had $100 million in there, right? They took it out for $100 million. The key is in order to get that $100 million back, you got two ways to get it back. Either you got to hold that bond to maturity, or somebody else got to buy it for you at the same par price or higher or at a premium. It's the only way. Now, if you want to get out of it early and there's nobody there to buy it and you got to discount it to sell it, it's no longer worth 100. You don't get the 100 million back. You might get 75 million back. So you got 25 million you lost. And that's what's happening with these mid-sized banks and these small banks is as their loan portfolio, their commercial real estate loan portfolio starts to deteriorate and people start to default on these loans, people are starting to come into their institution and ask for their money. They don't have it. They don't have the money. So in order to not have a widespread problem like that, the Fed has to reduce short-term interest rates. You got to understand there's about $1 trillion in commercial real estate coming due in 2024 and 2025. A lot of those commercial real estate owners are not going to be able to absorb a 3% increase in their interest rate and still cash flow and still make their monthly pay. They're not going to be able to do it. So the Fed got no choice but to reduce short-term interest rates at some point, guys. They got no other choice. If not, something's going to break in this economy, and commercial real estate is going to be one of them. Something's going to break. The banking system, mid-sized and small banks, is going to be the other one. It's going to break. And then we're going to get thrown into a recession, and all hell's going to break loose. So they got no other choice but to lower these rates this year. They're going to keep on kicking the can as far as they can, because they can. But at some point, they got to reduce. So don't worry about them reducing this year. They will. I don't know when they'll reduce, but they will because they got no other choice. If not, commercial real estate, small and medium-sized banks, and us as consumers are going to suffer. Now, the 1% ain't going to suffer. The big boy, too big to fail banks ain't going to suffer. But the mid-sized banks, the small banks, us, and the commercial real estate market, and I'm not talking about hedge funds who own commercial real estate. I'm talking about mom and pop commercial real estate owners like you and me. There's a lot of commercial real estate owned by just regular old folks, man. Guy got a 20,000 square foot retail center, just a regular guy. But all of his wealth is wrapped up in that retail center. All of his net worth is in that retail center. So if that retail center fails, he goes back to zero. That's what's at stake here. So the Fed got no choice, guys, but to reduce these rates. They know that, but they're going to kick the can down the road as far as they can just to make sure inflation doesn't roar its little ugly head again. So they're going to kick it down. By June, though, they'll be reducing. Well, all right, guys, let's dive into your daily dose of crypto, and let's talk about why the United States Senate called crypto a pump and dump. So let me read this for you guys, because I don't want you to think I'm kind of trying to pull a fast one on you, because I know some of y'all might think, oh, this guy don't know what he's talking about. He's trying to pull a fast one on us. No. United States Senate, Washington, D.C., 20510, March 11th, 2024. A couple of senators sent a letter. They sent a letter to the Securities and Exchange Commission. And here's what the letter said. I'm going to read the letter to you because I know some of y'all think I'm lying. Some of y'all think I'm just making this up. But no, just hang in there. Just hang in there with me for a few minutes. Again, we got to practice some patience. We can't just want to be entertained. We got to practice some patience. So just hang in there for a couple minutes. Dear Chairman, and they're talking about the chairman of the SEC, Securities and Exchange Commission. We write to urge the Securities and Exchange Commission to take steps to protect investors following its recent approval of the listing and trading of certain spot Bitcoin traded products. The SEC's approval have provided a green light for Wall Street to sell volatile cryptocurrency investments to ordinary Americans through their brokerage and retirement accounts. Now, y'all know doggone well these big boy Wall Street firms ain't got no business having your retirement savings in no doggone crypto. Y'all know that. But see, I try to tell y'all, these people don't care anything about you. All they concerned with is making money. That's all they concerned with, guys, is making money. They don't care anything about you. I keep telling y'all that. Oh, go to a financial advisor. Oh, go to this guy. Okay, this is coming from your U.S. Senate now. This ain't coming from Richard Fain. This is from the United States Senate. Given the significant and unique risks posed by cryptocurrency, it is critical that Americans receive accurate, comprehensive information about Bitcoin ETPs, which is exchange traded products. In a recent review by FINRA, whoever that is, roughly 70% of brokers. Let me read this for you. I just want all y'all, oh, you gotta have a financial advisor. You gotta do this, you better do that. In review by FINRA, roughly 70% of brokers' communications with retail investors, that's you and me, we're retail investors, regarding cryptocurrency violated fair disclosure rules. I'm gonna keep reading though. For all of y'all that want to pay attention and listen, I'm gonna keep reading. In some cases, brokers' communications falsely equated cryptocurrency with cash. In others, they provided misleading explanations of cryptocurrency's risks. These alarming deficiencies raise significant concerns that brokers and advisors may now provide incomplete or deceptive information about Bitcoin ETPs to retail investors. That's you and me. The naming and marketing of many Bitcoin ETPs appear to be, that's crazy. That's crazy. The characteristics about these investments, the SEC filings and other investor documents, sponsors commonly refer to as Bitcoin ETPs as Bitcoin exchange traded funds, or ETFs, because they use ETFs, but it's really ETPs. Although it may seem like a small distinction, this powerful confusion of terminology is troubling because Bitcoin's ETPs are different in critical ways from mutual funds or ETFs. See, that's what they try to get you. They want to confuse you, right? They really should be calling them ETPs. But what they're doing is they're calling them ETFs. Mutual funds, ETFs. Why? Because y'all are familiar with ETFs and mutual funds, so they want to trick you into thinking that's the same thing, but they're not. They're not the same thing. See, this is how they trick you to 1%, these Wall Street firms that you got your money with, right? Because Bitcoin ETPs are not subject to the substantive and structural protections under the Investment Company Act of 1940, they are not subject to restrictions on harmful practices that apply to most investment funds marketed to retail investors. See, there is no oversight, guys. There is no oversight, right? So they're saying here, there are harmful practices that apply to most investments funds marketed to retail investors, including mutual funds and ETFs. These include a fiduciary duty, limits on leverage, custody requirements, corporate governance requirements. Conflicted practices, restrictions on fees and expenses, chargeable to investors, and explanation by the SEC. The use of terms such as fund or ETF imply that the full protections of the Investment Company Act would apply, but unfortunately they do not. See, they're trying to put this thing like it's a regular ETF, like it's a regular mutual fund. It's not. It's not, guys. And that's what the United States Senate is telling the SEC. It's not. It's deceptive. They're tricking retail investors who don't know any better. They're tricking these people. You get $3 trillion basically flow into Grayscale, BlackRock, ARK, when they came out with their spot, and they call them spot ETFs. That's what the mainstream media is calling it. But the mainstream media is part of the 1%, right? They want you to think it's a regular ETF or a regular mutual fund, but it's not. It's not. We appreciate that these ETPs have several basic investor protections, which apply to any security that is registered with the SEC. So it does have some level of oversight by the SEC, but listen to this. These include public disclosures of risks and conflicts of interest, as well as general prohibitions on fraud and manipulation. However, investors should be made aware of how the ETPs differ from more common funds with which they may have experience. We urge the SEC to take several specific steps under its existing authority to address these issues. Number one, carefully scrutinize brokers and advisors' communications regarding Bitcoin ETPs to ensure investors receive complete and accurate information about these products. Number two, examine brokers and advisors that recommend cryptocurrency ETPs to ensure they are in fact acting in the best interest of their client as required by SEC rules. And three, ensure that Bitcoin ETPs do not use inappropriate and confusing naming conventions in SEC filings and other investor documents. Don't be calling it an ETF or a mutual fund when it's not. Don't be calling it that. But yet and still they are. Why? Because they want to mislead you. They want you to think you're familiar with it. But it's different. It's different. A lot different. Number 3, ensure that Bitcoin ETFs do not use inappropriate and confusing naming conventions and SEC filings and other investor documents. These steps would help protect investors from fraud and abuse, which may be enabled by current light touch regulatory regime applicable to Bitcoin and ETPs. Basically, you got no oversight over them, basically is what they're saying. Very little oversight. Basically the wild, wild west, right? These ETPs are brand new. They're trying to sell them as ETFs, make you think they're ETFs when they're not. Very different rules apply to them, right? Basically no rules. Finally, we believe the SEC should strictly limit the procedural application of these approvals. While the Bitcoin market has displayed serious weakness, let me read that again. While the Bitcoin market has displayed serious weakness, it is nevertheless far more established and scrutinized than the market for any other cryptocurrency, right? They're saying Bitcoin is a little bit more scrutinized than some of these other little coins. However, vulnerable Bitcoin may be to fraud. And manipulation. Markets for other cryptocurrencies are far more exposed to misconduct. And that's true. Bitcoin does have a little bit more, level of scrutiny around it. But the rest of them, come on, man. Y'all already know the history of the West, though. I don't even need to go there. While we do not believe that other cryptocurrencies show the trading volumes or integrity to support associated ETPs, nor do we believe that markets for futures on other cryptocurrencies are likely to demonstrate the tight correlation with spot markets that would enable meaningful market surveillance to deter and detect bad actors. Basically, Bitcoin is the 900-pound gorilla that we're worried about right now, not the rest of these other little ones. And then let's sum it up. Retail investors would face enormous risks from ETPs, referencing thinly traded cryptocurrencies or cryptocurrencies whose prices are especially susceptible to pump and dump or other fraudulent schemes. So y'all thought I was lying. Let me read that one more time, because I know some of y'all thought I was just lying and clickbaiting you. Thought I was lying. Retail investors would face enormous risks from ETPs referencing thinly traded cryptocurrencies or cryptocurrencies whose prices are especially susceptible to pump and dump or other fraudulent schemes. And y'all know the history of Bitcoin. Y'all know the history of crypto. It's filled with fraudulent pump and dump schemes. Filled for the last 14 years. Y'all know this, especially over the last 3 years. The commission is under no obligation to approve such products, and given the risk, it should not do so. Let me read that one more time. The commission, basically the SEC, is under no obligation to approve such products, and given the risk of cryptocurrency, it should not do so. Thank you for your attention to this matter, and we look forward to your response. Jack Reed, United States Senator, and United States Senator Butler. So for those of y'all that thought I was lying and just clickbaiting you, no. The United States Senate basically said it's a pump and dump. And the SEC is under no obligation to approve any more of them. Now, y'all can take it how you want to take it, but that came from the United States Senate. It's on United States Senate letterhead. It didn't come from some guy on YouTube or some rogue guy who, Richard Fain wrote the letter. Nope, came from the United States Senate. It's on the United States Senate letterhead. Go out on Twitter and look it up. Read it for yourself. I'm not the best reader in the world, but you get the point, right? You get the point. Go read it for yourself. Guys, I'm here to tell you, you can get fooled by this Bitcoin spot ETFs. It ain't an ETF, number one. It's not a mutual fund. It's a highly volatile digital asset. Has a history of for over the last 14 to 15 years of huge pump and dump, huge swings in value. Millions and millions of Americans have lost everything fooling around with cryptocurrency. So now you see Bitcoin. Guess what? It tries to get itself up to what? $73,000, $74,000, $75,000 a coin. Market rejected it. Now it's back down to what? 62, 63,000 a coin? It's trying to reset itself. See, what you got to understand about Bitcoin, guys, is this. Bitcoin will not surge unless there's a catalyst, unless there's a trigger. That's all it has. It feeds off of euphoria and FOMO. Bitcoin cryptocurrency feeds off of FOMO. That's the only way it goes up in value, is when people fear of missing out on it, so they're willing to pay. But when people are not willing to pay, you see what happens to it. It goes back down in value. And it'll stay down in value until the next catalyst, until the next trigger. See, the last trigger was when Grayscale, BlackRock, ARK Investment, when they came out with these spot ETPs, that was the last catalyst that took it to another level. Because now the everyday common retail investor can just go get into one of those ETP funds, and now you got Bitcoin. That's how they got in $3 trillion like that. That's what sent it to the moon. Problem is, it had nowhere to land on the moon, so it had to come back down to Earth. And they had no spot for it. There was no spot to land on the moon, so it had to come back down to Earth. That's why it fell from 73,000 a coin at its peak down to where it's at now. And again, it'll hover there until the next catalyst or the next trigger comes along. That's why they're trying to get all these dang on ETPs passed, because that's the trigger. That's the trigger. And the United States Senate, at least these two senators, are saying, don't approve anymore. Don't approve anymore for these guys. This is Wall Street just trying to get rich and wealthier at the expense of retail investors who don't know no better. They don't know no better. Mainstream media is calling this thing an ETF, guys. And you know why they're calling it an ETF? Because you and I are familiar with ETF. We think it's an ETF. No, it's not. I just read it. This is the complaint from the United States Senate. I don't know. I mean, what else do you need to hear, guys? Now, I know there'll be people out there that won't listen to this, right? They're diehards, and that's okay. My job here is to give you the information. What you do with it is up to you, right? Me personally, I ain't touching it with a 10-foot pole. I'm going to stick to my 3 big boy blue chip, 100-year-old proven track record. I'm going to stick with them. And I'm not messing with no Bitcoin, none of that, because I already know what Bitcoin is. It's pump and dump. It's a Ponzi scheme. That's all it is. It is not going to move in value anymore, guys, till the next catalyst comes along, to the next push. Now, BlackRock oh yeah, let me show you this. Here's BlackRock now. Here's BlackRock. Here's BlackRock. BlackRock launches digital asset fund backed by $100 million on Ethereum. See, you notice something about BlackRock? Now all of a sudden, they the Bitcoin king. Asset management company BlackRock is launching a tokenized digital asset fund, a new SEC file. See, now they coming out the woodwork now. See, now you got all these Wall Street firms coming out of the woodwork. They coming out of the woodwork because they done got one approved. Now they going to the SEC and gonna get all of this crap approved. All of this Ponzi scheme stuff, and the only person who suffers in this whole thing, guys, is you. BlackRock ain't gonna suffer because they're gonna get their fees right off the top. So they can get their fees right off the top. If this thing burns and crash, BlackRock ain't gonna be holding the bag. You holding the bag. Trust me on this. BlackRock is not gonna hold the bag, you gonna hold the bag. In turn, BlackRock seeded the fund by depositing $100 million in USDC stablecoin on the Ethereum network. The BlackRock USD Institutional Digital Liquidity Fund was incorporated in the British Virgin Islands. Why in the hell you incorporated in the British Virgin Islands? Why do you got to go to the British? Why you incorporate right here in America? Why did you incorporate it into the U.S. Virgin Islands? I'm curious about that one. Why would you incorporate in the U.S. Virgin Islands? And will be launched in partnership with Securitize, a tokenization firm. According to wallet data, BlackRock deposited Circle's USDC stablecoin into a wallet on the Ethereum network. BlackRock is continuing its journey into the digital asset industry following its spot Bitcoin ETF. See what I'm trying to tell you? See how they keep calling this thing ETF when that is not what it is? I keep telling y'all, man. I keep telling y'all, man, these folks ain't doing nothing but trying to 3-card Monty y'all, man. They're trying to 3-card Monty you. I'm telling you, these people are trying to they still calling it an ETF when that ain't what it is. BlackRock is continuing its journey into the digital asset industry following its spot Bitcoin ETF launch earlier this year. The company's Bitcoin ETF has been one of the best performing Bitcoin products out of the field of new launches in 2024. Additionally, BlackRock has a pending application for a spot Ethereum ETF, which the SEC is putting off approval of. Of course they're going to put it up, and they better put it off. You know doggone well Ethereum ain't worth crap. Bitcoin is barely worth crap. Ethereum is really not worth crap. And now you're trying to get a spot ETF. That ain't the real name. It should be ETP, right? That's what they should call it. But see, if you see ETP, you're going to be like, oh, golly, what is that? I've never heard of that before. I can't invest in something I've never heard of. But if you call it ETF, oh, yeah, that's an ETF. That's like my S&P 500 ETF. No, it's not. No, it's not. Big difference. One is a pump and dump. One is a wealth builder. A long-term wealth builder. One is a pump and dump. One is a pump and dump. I ain't going to even read anymore about BlackRock because, again, these people greedy. These people greedy and Wall Street greedy. And they're using you. All of this, guys, I told y'all the 1% uses and abuses the 99%. Now they got all this trickery, what they call in the thing, and that ain't even really the technical name for it. The technical name is exchange traded products, not exchange traded. But this is what they're doing. Trickery. Now you got these brokers, you got these advisors, they're going out. You know how much money these guys have went and got from normal, everyday, regular folk? You know how many pension funds are putting money into these spot ETFs or whatever the hell they call them? That BlackRock, Grayscale, ARK. Are you serious? You're taking people's retirement savings and putting them in Bitcoin? Guys, you better know what your financial advisor doing with your money. All y'all out there that got these financial advisors, they eat what they kill. I just want you to know that. They eat what they kill. And if you don't know what that means, go look it up on the $1 trillion research lab. They eat what they kill. So all y'all got your little money with these brokers. Hopefully these people are trustworthy and they got your best interest at heart. But if I know these people eat what they kill, anytime there's an opportunity to make a bunch of money fast, they're going to make it. So you better go sit down and figure out who your broker is and make sure this person has your best interest at heart. And at the end of the day, it's your money. So what you should be telling your broker is, this is what I want my money in. You don't get to make that decision, Mr. Broker, Mrs. Broker. I get to make that decision. I want my money here. I don't want my money here. But if you don't go in there and tell them that, or whatever little piece of paper you didn't sign that gives them authority to make trades on your behalf, and if they lose those trades, guess what? That's on you. You've already signed the paper saying you give them authority to do it. You better figure out what's going on, guys. I'm telling you, it's getting crazy, especially with this little spike in crypto. But as I've always told you guys, it's in the pump phase. At some point, it will dump because that's the history of it. I'm a history guy. I just go over the history. At some point, it will dump. And hopefully, you're not left holding the bag. I hope not. I hope you're not left holding the bag. My recommendation, like I said, is take a look at your investments and look at the historical track record of the investments and make sure they can stand the test of time. My 3 big boy blue chip paper assets have a proven track record. Stock market has been around for a long time, over 100 years. All right. And the good thing about the stock market for me is you got underlying tangible companies that support it. You got nothing under Bitcoin other than what the next guy will pay for it. That's it. Nothing else. In the stock market, you got companies. That's the key for me. You got companies. You have companies, right? Remember we talked about Apple and we talked about the potential partnership between Apple and Alphabet, Google. See, those are companies. So when $250 billion is added to the market cap for the Magnificent Seven, I know why. There's a reason for it. There's a reason that I can understand. But when Bitcoin goes from $50,000 a coin to $73,000 a coin, I have no idea why it went that high. Other than, the next guy was willing to pay that. You just heard from 2 United States senators sponsoring this letter from the United States Senate. It's acceptable to pump and dump schemes. Just telling you. I'm just telling you. If you're not afraid of that, if you're not concerned about that your life savings potentially could be in this pump and dump, you better go talk to your advisor. You better go talk to whoever does your money for you. You better go talk to somebody. Some of you guys out there, your pension funds, they're in this stuff because some Wall Street guy or gal done convinced them to put your pension fund or 20% of the pension fund in one of these pump and dumps. What's going to happen to part of that money when the dump phase hits this Bitcoin thing? Because it's going to dump. It's going to dump at some point. What's going to happen when it goes back down to $17,000, $18,000, $20,000 a coin and your pension and bought it at $69,000 a coin? 20% of the fund is in there. 10% of the fund is in there. And that thing dumps and goes back down to $15,000, $17,000 a coin, which it will. And then it'll just be ready for the next pump and dump because that's what these Bitcoin whales do. That's what these Wall Street firms do. I'm just saying, man, think about it. That's your daily dose of crypto. There is your daily dose of crypto. Well, guys, I appreciate you. I appreciate you rocking with me. It's been fun. If you don't mind, lock it in with a thumbs up before you get out of here. I really would appreciate the thumbs up. Just to let me know I'm on the right track. You appreciate the content. We went through a lot today. We went through a little bit on the Fed and what my take on the Fed is and what direction that they're going to take today. So if you don't mind, lock that in with a thumbs up if you got some good Fed information. Again, my recommendation today at 2:30 p.m. Eastern time, lock in and listen to what the Federal Reserve Chairman has to say when he gives his address at 2:30 p.m. Eastern time. Lock in, man. Figure out what this guy's talking about. If he says words you don't understand, write them down and then go to the $1 trillion research lab and figure it out, right? Figure it out. So we covered the Fed. We'll cover the Fed tomorrow. Once we get some more data overnight, I'll get some more data and we'll cover the Fed tomorrow to wrap that thing up for this week on the Fed coverage. We also talked about stocks, Magnificent Seven. Y'all know how I feel about that. I think that's one of the most solid investments over these next 10 years that I can make. And I've given you my reasons why I invest in it. I went through sort of what the Magnificent Seven has done over the last week. $250 billion in market cap added. Just like that. So, for me, I think 10 years from now, I don't know, a couple $1 trillion in market cap over the next 10 years. Maybe $3 trillion in market cap over the next 3 years, maybe more than that. Especially with NVIDIA hitting a home run, right? Home run leader, NVIDIA. And then you got other companies up and coming. Microsoft is killing it, right? Meta is doing great. I think you'll see Tesla come on, and I think Apple will come on strong. So I'm happy with the Magnificent Seven. I'm happy with SPLG, which is my S&P 500 ETF. I'm happy with FTEC, which is my information technology ETF. See, these are real ETFs, not some made up sham crypto thing. No, these are real deal Holyfield. Real deal Holyfield. These are the real deal Holyfield. And I'm in them for 10 years, the next 10 years. So, hey, you want to rock with me, join the program. Down in the description box, there's a Moomoo link. Moomoo is going to give you up to 15 free stocks when you open a Moomoo account. You put $100 in that Moomoo brokerage account, they're going to give you 5 free stocks. You put $1,000 in your Moomoo brokerage account, they're going to give you 15 free stocks. And guess what, guys? Now you're in a position to do what? Build some wealth. Now you're in a position to start buying your favorite ETFs and your favorite individual stocks. And again, if you want to copy my plan and rock with me, send me an email and just say, hey, Richard, I opened my Moomoo account. I put my money in there. I'm ready to get busy. I'm ready to get this money. I'm ready to get this bag. I'm ready to get this pot of gold at the end of the rainbow. And then I'm going to send you my 3 big boy blue chip paper assets. I'm going to send you the video that outlines my wealth transfer blueprint. Now, that don't mean you got to follow me, guys, because I'm not your financial advisor. I'm not a CFP. I don't work on Wall Street. I'm not trying to pump and dump you. I'm not trying to take nothing from you. I'm just telling you what I'm doing. If you want to copy that, have at it. If you don't, do whatever you want to do. It's your financial freedom. But I'm telling you how I'm going to double my net worth in the next 10 years. And if you want to copy that plan, you can. Ain't nothing wrong with that. But no, it's your decision. It's not my decision. You ain't got to copy nothing I do. I'm good. I know what my net worth going to do because I got history on my side. I got 100 years worth of history on my side that says if I do this and I do it for the next 10 years, I'm going to double my net worth. That's what history, 100 years worth of history tells me that. I don't know. I'm going to go with that 100-year worth of history. Plus, I've done it over the last 25 years. So send me that email when you open the Moomoo account. You got to put some money in the Moomoo account if you're serious, right? Ain't no sense of opening something and you ain't got no money in it and you can't make no moves. If you're going to make moves, you got to put money in it. And you got to be ready to put money in it every single month for the next 10 years. You got to put money in it every single month for the next 10 years in order to get the compounding effect that we're looking for in the stock market. You got to put it in there for 10 years. Got to put your head down and work hard, take that money that you earn, put it into these assets for 10 years and just trust the process. That's what I did. And I'm happy I did. I just trust the process. I just took that 100-year history of multiplying money and I trust that process. I can't trust a process that's been around for 14 years and full of pump and dump schemes and millions of people losing money and billions gone through crypto exchanges and crypto lenders. And now you got these snakes on Wall Street trying to call something an ETF and a mutual fund when it ain't what it is. Boy, these jokers on Wall Street don't care, boy. They tell you hard out, boy. I'm just telling you, you heard what the senator said. That wasn't my words. That was from your United States Senate. That came from your United States Senate, not from Richard Fain. I just read you a letter from the United States Senate. I know. Wasn't my words. It was their words, but it backed up everything I've been telling you for the last 2 weeks. Completely backed up everything I've been telling y'all. Y'all, oh, this guy, he's anti-Bitcoin. He's anti-this. Guys, I've been telling y'all this, and it just backed it up. It comes from the United States Senate on their letterhead. And some of y'all still won't believe it. That's the crazy thing, boy. Some of y'all in that matrix, and y'all ain't gonna get out that matrix. Y'all gonna stay right there in the matrix. I'm gonna stay right here in the matrix. And as soon as the dump come, then you're gonna be looking like a little sad puppy. Oh, what happened? Ooh, I bought at $69,000 a coin, and geez, it's $15,000 a coin. What am I gonna do? Tried to warn you. Well, guys, all right, I'm going to get on out of here. Appreciate you. You know I'll be back tomorrow, 10:30 a.m. Eastern time. I'll be back with another bit of information that I would ask you guys to consider. Everything that I've went over today, guys, is just a bit of information. It's just a bit of information. Whether you receive it or not, you don't have to. Don't listen to any of it if you don't want to. Matter of fact, just kind of erase the live stream out of your filter system. Plug in and erase it out of your filter system. That's all you got to do if you're not comfortable with what you just heard. But I'm just trying to tell you the truth. And it's backed up by the United States Senate. See, I don't have to lie. I just go to the United States Senate, pull out their documents, read them to you. I'm telling you what they're telling the SEC. Don't approve any more of these things. I'm just telling you. That's what the United States Senate is saying. I don't know. Y'all tell me down in the comments. I'm sure I'll get quite a bit of those. So I appreciate you, man, for rocking with me. Like I said, if you want that Moo offer, you got to go down to the description box, click on that Moo link, get yourself up to 15 free stocks. Get yourself up to 15 free stocks, and then email me and let me know you've done that. You've put money in there, and let me know you want the wealth transfer blueprint video and you want the Moo tutorial video. I'll send you both of them free of charge. I don't charge nobody for none of that kind of stuff. Matter of fact, I don't charge people for really nothing other than my financial coaching 1-hour sessions. It's the only thing I charge people for is when they want an hour of my time has a value associated with it. So if you want an hour of my undivided time through my company, RF Financial Consulting, that I charge you for. But that's it. I don't charge you for nothing else. I'm on here every day, every single day, in one capacity or other, whether it be live streams that turn into a video or just regular videos. I'm on here every day. I don't charge nothing. I don't ask for nothing. Other than, hey, if you want to rock with me, try Moo. If you want to rock with me, watch the videos. If you were to really, really rock with me, try the 1-hour financial coaching session. That's it. That's my stick. There ain't no, send me this and I'm going to get you in my funnel and I'm going to get you in a webinar and then I'm going to upsell you to the bronze package. And then, when you get to the bronze package, I'm gonna up you to the silver package. And then from the silver package, if you really want to hit it out of the park, I'm gonna have to upgrade you to the gold package. And once you get to the gold package, oh my goodness, you're gonna be making $50,000 a week when I get you to the gold package. I don't go, all of that clown stuff, man, I ain't about all that. I'm about giving you guys information free of charge, unless you want my undivided attention for 1 hour. That's the only thing I charge for. Other than that, all the emails y'all send me, and I get at least 150 a day, at least 150 emails a day, and I answer them all. I answer all your emails. Now, it ain't gonna be some long, drawn out autobiography response. I'm gonna be, hey, thank you for rocking with me. I appreciate you. If you email me about the wealth transfer blueprint or the Moo tutorial video, I send those out to you. I don't have time to be dialoguing forever, right? I'm gonna hit you back, say thank you, keep rocking with me. If you got a specific question, boom, and I can answer it in 2 or 3 sentences, I do it. Outside of that, guys, just sign up for the 1-hour financial session. Now, if you got a whole 2-3 pages worth of questions, I can't answer all those. That tells me you need a full 1-hour session with me, which it's an investment in you. Then I can answer all those questions. And I have to respectfully tell people that. But I appreciate you rocking with me. Like I said, Instagram, my new Instagram page. Before I get out of here, I got to plug my Instagram page. But here's the thing, guys. Only click on the link down in the description box. That's my Instagram page. If you go over to Instagram and try to type me in, Wild Wild West over there, man. You're going to have all kind of crazy stuff over there. So if you want to follow me on Instagram, just go to the description box of this video and click on the Instagram link. That takes you directly to my page. Also, another little quick thing. When you go to Instagram to follow me, if you look in the section that says, the people that are following you and then who you following, you'll see I have 0 people that I'm following. That's just to let you know that's me. I'm not going to follow anybody on Instagram because my only purpose of being on Instagram is to give you guys a way to communicate with me through DM and me posting, 60-second reels about financial freedom and giving y'all little tips, 60-second tips. It's the only reason I'm on Instagram. So if you want to follow me there, you're more than welcome to, but just click on the link down in the description box. Well, guys, I appreciate you stopping by the channel for the first time and you want to subscribe and hit that post notification bell so that you're notified every time I'm up on the platform. And of course, guys, hit that thumbs up for me before you get out of here. Please hit that thumbs up before you get out of here. I appreciate y'all rocking with me. And guys, it's just starting. We're gonna continue this thing going because I got a lot to share with you. I got a lot to share with you, and I enjoy sharing it with you, and I enjoy y'all's reaction to it, and I enjoy y'all following me and hanging in there and rocking with me. So thank you very much. But hit that like button before you get out of here. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. And I'll catch you guys on the next one. Peace.